Good evening everyone, it's 10 to 10, 1st of September. About a couple of glasses of wine, long day, a lot of trading done today, and I felt in the mood to talk about moving averages and introduce ourselves as GARD, really a little bit of what we do and what makes us different to a lot of other people out there. Main difference is we don't sit on Lamborghinis and yachts and golf courses. We actually trade and we post the trades live as and when we do them. So we don't believe in hindsight trading. And I admit you can argue what I'm going to go through with this is a bit of hindsight trading, but the trades that we are posting, which I'll come around to later on, we are actually doing them as and when they happen. We're discussing them on the forum with a huge amount of other people who do exactly the same thing. So I just wanted to have a chat about moving averages, which is a way I trade. And again, what makes us a little bit different to some other people out there, when you look at them and people talk about 30 different strategies of the absolute guaranteed way to success with your sniper entries and million 3-bar candlestick, whatever it is, it's nonsense, okay? It's too much information. People who trade professionally do not trade with 30 or 40 different strategies. They find a strategy that works for them, and that is what they use. And I use moving averages as support and resistance, and I use divergences, and I use a couple of oscillators. I use the awesome AWSM here, and I use the MACD, and I also use the RSI, and that is all I use, and I don't need to use anything else. It might not work for you because everyone is different and you have to find a strategy that works for you, but this is what works for me. And I just wanted to have a little bit of a discussion about moving averages because a lot of people are a bit misinformed of how to use them. A moving average is reflecting an average price. A 200 moving average is looking at the last 200 periods on whatever time frame you are, and it's showing that in a series of dots that get connected up to make a line. And you've got the 50, I use the 20, using on all different time frames. And higher the time frame, the higher the strength of it, the same as the higher the moving average, the higher the strength. So a 200 moving averages on an hourly time frame carries a lot more strength than a 50 moving average on a 1 minute time frame. And when we trade moving averages, what we're trying to do is trade from one time frame into another time frame. A lot of people talk about trading moving average crosses, where you're waiting for these moving averages to cross, but what they don't tell you is you can't trade like that because it's too late. By the time there's a cross, a move has already happened. So if you look here, if you are looking to short this market and you're only going to short when the 50 moving average has crossed the 200, you aren't shorting at this price here because the price is down here already. So you have already missed out on that move from here all the way down to here, and that's not what you want. When we trade, we are shorting this level here. We won't hold it all the way down here very often unless we're swing traders, and you can do. And most of us will be shorting from this level to this moving average to this moving average, or if you're going long from here to this moving average to this moving average, and so on and so on. And that's how we trade moving averages. And we find our entries with divergences. And a divergence is when you get a higher price or a lower price, depending on which way it's going, obviously, bullish or bearish. We have here a higher high than this high here. And on an oscillator, you have a lower high. And here again, you see a lower high. And now this is what we look for when we are trying to find our trades. But we don't enter on an hourly time frame, which is what this is, or a daily. Again, common misconception. A lot of people look at charts and they tell you to wait for these signals, and that's where you place your trade. You don't. do that. An hourly candlestick can be huge. It's got too much price movement. You could place a trade and you could be 40 pips offside before you know it. You scale it in and you look at the 5-minute chart, the 15-minute chart, the 1-minute chart, and that's the only charts I use really. I will look at the daily and the 4-hour as well a little bit, but mainly I'm trading with the 1, the 5 and the 15 and keeping an eye on the hourly in the morning and throughout the day, just to remind myself of certain levels. So, and here we go. So when we're talking about support and resistance, a lot of people talk about it with levels like this, a fixed line. That is not, again, what you use a moving average for. A moving average is fluid, it moves. And as the price moves, the moving average moves with the price. And this is a perfect example, and this does happen throughout time. Price here broke through a resistance level when the 200 MA was acting as resistance, and all support and resistance, whenever it gets broken, it gets retested, and old resistance becomes support, old support becomes new resistance, and that's exactly what happened here. And it kept being tested until the price fanned out. And with moving averages, as the price fans out, the stronger the lower moving average becomes. And sure enough, as the price then starts to consolidate and starts to break down, you see it starts retesting this support level over and over again until it breaks. And then sure enough, once it does break, it becomes resistance level. And now that is what a moving average is, and that is what a moving average is for. And you can trade off of this, and you can trade off of it brilliantly. You'll find a lot of people get very excited whenever you see a move. You have a down move here, and there'll be people thinking that it's going to drop straight all the way back down here again. It won't. It just won't. And it won't because the price of this, the angle of this MA is too steep and it is too strong. If you want to break a very strong support level or resistance level, which is what this is, which has been there for a very long time, it needs to flatten or soften, as we say. And this happened here, which is when the 200 MA started to flatten, and this happened by consolidation, meaning the average price gets lower and lower and lower, therefore the curve starts to flatten out. Now once that's happened, it can be broken, and once it's broken it can be retested, and of course as it gets retested the price is coming down, therefore you're getting new lower highs. And that's it in a nutshell. And one of the things we do on GARD is we discuss things like this quite often. We have regular chats and we even go over it with recaps, talking about it. I did this section here whenever it was a week ago. We discussed it, and then I did some slides just discussing it, the reason why it broke down. You know, we've got people thinking it was going to drop here and come all the way down. I was trying to explain why it won't, and if you scale it in, which is what I did in another slide, you will see this gets choppy, it's consolidating. The only way the support level was going to break was when the price came below a lower time frame moving average. This is a 15-minute, and the price came below this 200, and that allowed the price to then creep down. The 5-minute and the 1-minute would have looked exactly the same as this, and then when it breaks, sure enough, it came back up here and acted again as resistance. And it did, because we were talking about moving averages and divergences. This is another slide I did at the time, discussing the entries I took throughout the day. We can't post every single one every second we trade it because we are busy, but again, that's what makes us different to most people. Like I said, we are real traders. We're not sat on a yacht or swinging a golf club pretending that we're traders. So we post this because it helps people, where we make entries, why we make entries, where we take where we get our target price from when we close it, and we then talk about where we think it's going to go the next day. And me and Steve, a few others, this is how we do it. Everyone's got different strategies. Some talk fibs. This is me. I do moving averages. Here's an example of some of my entries I did, and this was on the end of the day after it all happened, and we discussed this I think that evening or the night before, of why it was. So I just wanted to show that and explain a little bit about that, and then move on to discuss the day's action. We've had quite a bit of action today, the last few days since it's broken down. We've tested the new resistance, and sure enough, as I spoke about MAs fanning out, as the MAs fan out, they become further and further apart, the stronger these levels become. So you can see how it started testing the 200 here, it then tested the 50, it's now testing the 20. And you know, you're never going to be getting sudden breaks all the way back up to this level, because these are too steep. This is now too strong. So any upside has to start to consolidate a little bit. And of course it can break through a little bit, but if it does, it will come back down and test it, I assure you. So yeah, so let's just have a quick look at the day. I just wanted to talk about some of the entries today. A lot of us posted them. No one gets every single perfect entry. That's impossible. We quite often miss an entry because we're actually explaining why we made an entry or disclosed an entry. It's quite infuriating, but that's part of it, and it makes it more fun, if I'm honest, because we're all having a good banter along the way. So I just wanted to look through the day and yeah, explain why the price did what it did, some of the entries we took, some of the target prices we took, maybe why the price didn't shoot up here at the time, and I'm going to go through all of that. And for me, this is all because of price action to do with moving averages. It's as simple as that for me. Someone else will have a different strategy and it'll work for them, and that's absolutely fine. This is what works for me. So if you excuse me, I'm going to have a glass of wine. Lovely. And here we go. So I did do a post-market recap on this at 12:30 this morning, this afternoon, sorry, around, where was it? I think I finished the video and the price was about here. But I will start again just from the beginning. So we had a flat 200 MA, a flat caused by consolidation where the price is going sideways. It allows the 200 to become flat. Now it was a bit of a tricky morning because it did go flat, and you might be thinking this price could jump up. This here time here is here, and if you scale it up, I always trade with two charts because I trade the 5 minute and the 1 minute, and for me they both work hand in hand. I need to see the moving averages on the 5 because they move so quickly, as does the 1. The 15 minute I will, well, the 10, I will scale in and out of it, but it just moves a little bit slower. So you can see we had a start of a drop here this morning. Fair play for anyone who got this short. I didn't take this one today, but it was literally, I mean, what are we talking, 1 pip over the 15 minute 200. And this is a moving average that has already been acting as a bit of resistance. It did here. We had a bit of a, this was a retest of another high of the hourly 200. This was failed, came back down, and now this is the next time frame down. This is the next strongest level of resistance. This is a very good short just there, but find my way again here, sorry, this was the daily. I do apologize, it was the 8 o'clock in the morning. Yeah, that's this morning. It was on the 50. This was yesterday. It already tested this, came down again. 50 MA had been showing its strength here, so again fanned out nicely. As you can see, it means this is now going to have a lot of strength, more strength than this at the moment, because this is too far away. It has to break this level if it's going to test this level. And if you look at the angle, they're very steep, which means they're very strong. And sure enough, we had a big down move, quite a drop, came down, good 40-50 points from there. And then there were quite a few short entries on the way down, again, all based on moving averages. I love trading in a channel, and a channel is when you see the moving averages fan out, and as they fan out, you get these pullbacks to a moving average, and I trade off whichever one is being respected. and you can either take an entry here and close it at the previous low here, or you can hold it and you can add to it at the next pullback, and then you can add to it at the next pullback, and you can add it here again on the next pullback. And your exit for your short here or your these shorts here is if you've got no fluid resistance level, support level from the MAs, the next thing you start looking for is divergences. And I mentioned it earlier, when we have, this is a bearish example now, the price is coming down, and as the price is creating little lower lows, all my oscillators are creating higher highs, and you can draw it with a line if you want, going up. And now this is how we pick reversals. A lot of people say trade is your friend. It can be. It's not as much fun, if I'm honest with you. It can be quite lucrative sometimes, but so can be trading reversals. So the trick is to trade both. So if you were short here and you're adding on this 20 MA here, all the way down to here, you would be taking your profit the first time you get a divergence throw up. And that would have been at this point just here, when we've delighted with that one there, actually, because we've had our first low and then we've come down again. So you'd be taking it here if you wanted to, or you can wait for a break of structure when the 20 MA actually fails, which is here. For me, I don't want to close my trade on a pullback. I want to close my trade at a low, which is here. But if you are taking a divergence entry long off of one of these divergences, you need to know your realistic target price. And it's not going to be, to the moon. It's not going to be up at this level. And it's not going to be up at this level because our moving averages are too steep. And they are too steep, therefore they are too strong. You need to wait for them to soften if you're expecting a reversal. And you can always then get a better entry on a retest of it. And if you look at the time on this chart here, and you look at it here, scale it in, you can see here, if you took a divergence, and I was taking some of these here scalps, but again, your realistic TP in this channel is back to the 20 moving average. And it's only sometimes 5 pips, 10 pips, but trust me, you do enough of them and they soon add up to 100 pips a day on the FTSE. The absolute most we'd be thinking here is a 50 as a target. And again, yes, you can take it back to here, but don't be greedy. You can take profit and then do a break-even stop loss if you want on your entry. But when the MAs on the higher-ish frames are this strong, it's pointless, because the price is not going to come back up to here when you have too strong a resistance line. And sure enough, this 906 peak, 7220, quite a few people took this short here on the forum, was here. And this is on the 5-minute 20 moving average, which is my absolute favorite moving average, because in a channel, it is the most heavily respected moving average you will find. So this was a great trade here. And as it came down, it did hit the S2 daily pivot very nicely. Pivots are always worth having on your screen. Again, we'll discuss that differently. And forgive me with mentioning the AWSM, the MACD and the RSI if you're not familiar with these. We will also do a video discussing these as well. But they're quite simple things, if I'm honest. We'll come to that in another video. But I only use them for divergences, pure and simple, nothing else. So we had our morning breakdown. Price came down. This is a very, very tricky channel to trade when it's like this. You've got no pullbacks at all. I think I took a short here because it was a little bit of green, but I didn't take a lot. It's pointless because you can't gauge where the stop's going to be when it's like this. You've got no moving average support below it. It's just dropping. And when it drops, just if you're on board, brilliant, ride it. If you're not on board, you can just wait. And when we came down to this level, we now were very oversold on all my oscillators. And I like it when it gets oversold, because when it gets oversold, I can start looking for divergences. And sure enough, as the price come along here, if you were aggressive, you could have shorted here as well, taken profit back on the previous low, or if you're brave, held for a little bit more. But again, for me, the second it throws up a divergence, I would have been taking profit. And so when you see the divergence, where do you enter your long? So for me, I can be quite aggressive with a divergence. Sometimes they don't make a new low or a new high. Sometimes they match the same price. And as long as you see the oscillator having an opposite high or a low, I will take it. So I would have taken this trade here. I think I did. And what I do with my trading, position size is very important. I never go with my biggest position size straight away. I will always scale it in, so I can leave plenty of margin. I can leave plenty of plenty of cover for error if I am wrong. So for me, I would start with a smaller trade size here. If the price came down again and we still had a confirmation of a divergence, which we did, it's still going higher here, I would then double my position size at this level, and I'd be taking my target profit back on the 50 MA here. And of course, I'd also be paying attention to what that price is. It's nearly at the 20 on the 50. So yeah, like I said, it's normally very strong. So that for me is where I've taken profit, not up here. Still too strong. You've got to wait for that. It's a game of patience, this. So what we had after this, and this actually is a very good example of how MAs flatten, the price then consolidated and it just went sideways. When you do see a range start to form like this, one thing I do, as soon as I've got two highs, two lows, I will draw a box around the area, and I'll take longs from the bottom and I'll take shorts from the top. But I will also bear in mind, you've got to keep an eye on the higher time frames. You've got to keep an eye on the moving averages, because you'll find when the moving average catches up with the price, you are going to have a bit of price action and the price is going to react. And sure enough, if you look, the price didn't as much pull back to the 200 on the 1 minute. The price caught up with the moving average caught up with the price on the 1 minute. And then when it does that, we start to see this little channel coming up. And my 12:30 post bell when I did here, I think I ended here and I said that was a good long, and then I ended the video. Steve took this long here and he closed it up here, and again the reason he closed it up here was because of, again, another divergence. We had higher here, and then as the price continued to go up, our oscillators started to go down. Again, brilliant signal for a reversal. Also, pay attention to your higher time frames. Where were we here? About 1 o'clock. 1 o'clock here. So again, 5 minute didn't show much. Move out to the 15 minute. 1 o'clock. So we're breaking up here. Again, we've still got very strong channel pointing down. It's still, all of this is just still strong. Don't get excited. There's no point in trying to look for that big move when you've got this. Because sure enough, we had a divergence. Although the 1 minute had turned, remember the 1 minute moves the most, it whipsaws the most. It's going to turn before anything else. If you are trying to catch a big move from the 1 minute and you want to hold it, you also have to be patient enough to see if this 5 minute chart is going to turn. And at 1 o'clock, it didn't. This came up, rejected it. Now this did level off. So aggressively, you could have taken a long here. What's that, 1340 here? And again, this is a long. I would take this long. But what you've got to be prepared for, I don't use stop losses. I do it mentally. And I will gauge that trade on when the market breaks down and it's not a valid trade. And for me, a long here is valid because the price is above the 200. I don't really like the look of this cross, if I'm honest, but again, I can be aggressive. This is flattened. The 20 MA's come above. So I'm thinking, okay, is this going to pull up? Could do. This 200 here is still steep. However, again, support resistance, if it gets tested, old support becomes new resistance. Sure enough, it broke down. It came back up to test it. So you've got a couple of attempts to test your long here, because you went long here, break even, down, retest. Now that, if it doesn't come back up, to me, that is your signal to close the trade, because the 20 MA has turned, the 50 MA has turned, the price is going to go back down. So if you close your long and you're brave, or not brave even, smart, this is where you then enter your short. You've been the long, you took here, break even, now we're short. And sure enough, we get another nice down channel. Just trying to keep these in line. And then again, 20 moving average, more little trades off of this average. And we're now coming down to a new low, which I mentioned on my half 12 video, that if the price broke down to this level again, we're then going to be looking at another divergence to try and see if we can start seeing some longs out of it, because we had our big sell-off here. Sure enough, we're back at this level. This is all higher than it is back here. Again, the same on the 5 minute. We're low, we're higher here. Take a look on the 15 minute. Here, this was the morning action, very oversold. Now we're here, the price is coming up. So this is a possible reversal. And you do have to be patient. The higher the time frame, the bigger the move, the bigger the scope, the bigger the pip range. It doesn't happen instantly. So you have to wait for it, you have to be patient with it. Myself and a few others, we were taking some longs here. But again, it was only back to this point here. No point being greedy, because you've got to look at that angle, that 50. It's way too steep. Wait for the price to consolidate if you want that reversal. So sure enough, we had a long here. I took one here and I closed it up here. Can't remember the exact details, but again, would have posted it on the forum. Now again, if you look here, if you are very keen-eyed, this is a lovely bit of resistance. 1 minute 200 MA. What's the time? 3:30. So we're here. We've got our 5 minute 50 moving average, and we've got the 1 minute 200 both in line at the same time. So you've got two strong moving averages both acting as resistance. So that is a very good indication the price is going to get rejected, especially when we still have this steep angle. And sure enough, if you look here, you've got a triple top, but not also that, you have another divergence down here, lower here, lower here, and this is all the same price. That's a cracking short entry, absolute cracking. And you can target the 50 MA if you want, take half profit, leave the rest break even, or you can target the previous low or take profit here and then see where it takes you. Because like I said, at the moment, there's still quite a bit of downward pressure. And now, as the day has progressed, again, we are still in divergence zones. Now, the earlier one got invalidated because we come down and we get another very big oversold area. So you've got to ignore the previous 1 minute. You then got to start looking new ones. But we were still in this 5 minute one. You've got this here, you've got this here, this, and this, lower here. It's not always easy to spot. You've got to keep your eyes on it. But this is when we're starting to look for reversals. But we've still got very strong down pressure. When you day trade, you take 10 pips. Sometimes you take 10 pips and you have a 100 pip move. It doesn't matter, because you won't just take this 10 pips. You'll take some more later on and you will add up and you'll end up with more than 100 pips than if you just did your one trade. So you got to forget the big move when it happens. We all kick ourselves. I've kicked myself a lot today. It doesn't matter. So as the time went on, where are we now? 4:30. So we're at this stage here. Like I said, we're now into another 5 minute divergence zone, and we're in the 1 minute divergence zone. Lovely. Oversold, not as oversold. So this is your nice entry. There's your first profit. You can enter again when it comes back down, or you can hold it. There's your profit up near the 200, also on a daily pivot. Just checking where it was here. Again, lines up with my 20 MA. But this is where you then got to start paying attention, because it gets a little bit choppy. And yes, we're in here, but if you look, we are no longer in a cleared down channel. We have the 200 is still steep at this point, so you still got to be careful. However, the 20 MA is coming up. The 50 MA is getting very messy. And suddenly, because this 200 is softened so much, we aren't getting a big rejection off of it, because the 50 MA is creeping up. We're having a price pinch, is what we call it with moving averages. When you get a price pinch, it's going to be squeezed, and it's going to keep getting squeezed until it bursts out. Much like a spot on your teenager's face. Move along, and we can see what happens on the 5-minute chart. So I had a couple of longs here as well. Whereas I think I did a cheeky one here, closed it. I did one up here. I then scaled it again on this dip, but I took the profit off the 200 because you still got to be cautious. The price now, because the MA is caught up, when the MA catches up, the price will creep through. Now, if you're looking for a long, you're not just jumping on it impatiently, you have to wait. And if you want to wait for it, you wait for a retest. If you want to test the strength, this was resistance. You need to see if it's support, so you need to see if it gets tested. And when it gets tested, that's when you enter your trade. And if we start comparing the two, we're now at about 7 o'clock. I took, trying to think now, I think I aggressively took one here just before dinner. I then took another one slightly lower down on the 200. And I then took profit when I saw another divergence up here. So sure enough, you can compare it again. My 5-minute 20 moving average, I do apologize. You can see here the price sometimes hugs, and you'll see candles sometimes of a moving average, and you'll see they will follow the shape of the moving average. And sure enough, we had a retest here of the 20 and the 50 on the 5-minute. So now a strong support level, and you will see how this 5-minute, for the first time of the day, yes, it started to soften here, but it's still pointed down. This is the first time in the day where it has gone flat. Now that means we've got a chance we're going to see a bit more of a price movement, a bit more of a rejection. And that happened here. Perfect long entry. You've got the 200 on the 1-minute and the 50 on the 5-minute. There's your long. And if you want to be, if you want to be cautious, you can close it if it breaks it and it breaks a previous low. It's only a few pips. But then sure enough, as we come up, like I said, we've had some very big bearish momentum. So I'm not expecting anything major. I will still take profit when I see a div, which is what we call a divergence for short. So I took profit here and I called it a day. I was watching some TV with my son and having some wine. So, but just an example of where we're going now as the time moves on. Again, more examples of my 20 moving average on the 5-minute. It's been respected here and it's respected here. The dotted line is 100. If you're interested, I don't tend to use 100 MA very often. And then we had a retest here, and this is where it then starts to get interesting, because we're now testing. We broke the 1-minute 200 MA. Our next target is 5-minute 200 MA, or it might be the 15-minute 50. You've got to look to see which way they are, see which one's lower. Here was the 50. Now this has been a biggie all day for a target to break, because this morning that was a rejection. It was rejected yesterday a couple of times. So this was a very big point for the price of the day. And yeah, nice bit of bulls come in at the end of the day when England's falling asleep. We had a test, we broke through, we've come down, here's a retest. So, and I guarantee you this will be on the 5-minute 20, 20, 45. There it is, off the 50 on the 15 minutes, straight back to the 20 moving average of the 5. Look at on the 1 minute, that was over here. So this is why you've got to look at all these different charts, because when people talk about a trend being your friend, you've got to remember a trend is only relevant in the time frame, and you can look at one trend and it can be choppy, it can be messy, it can be a downtrend. In another time frame, it can be a strong up channel, and that's exactly what this 5 minute started to do. It's now fallen asleep because it's gone 10, but here we go. So you could have had an entry here, target the 200 on the 1, and you can again entry here. You can target this again here, because there's not much point trading after 10. The spread becomes horrible, 4 points. Never trade like that. And we have now finally, as the days progressed, we have now properly broken this. So it's going to be a very interesting Asia session. I have no idea what's going to happen. I'll worry about it in the morning and I'll trade it accordingly. I'm a natural bull because I like to think our economy is going to do well. So for me, yeah, next level, we've got to consider, you have to seriously think if it's broken this 50 on the 15 minute, you have to consider the 100 because there's too much of a price gap between the two. We've got 80 points between it, and you have to have some form of resistance or support between a big gap. So this here, you can also check, look at a different time frame, see what else we got going on. So we've got the 1 hour 50, we're now at a 1 hour 20, so can't get too excited just because the 15 minute has broke. Remember, we've still got a very strong downward pointing 200 MA. This 50 has turned. This is why I love the moving averages. It shows momentum, not lagging, it's momentum. It shows you it's flattened because it shows you the price is trying to pick up. You then just have to zoom it back to the 1 hour though. And this is where you have to bear in mind, this is still strong. This is still strong. Now, of course, this is only a 20 moving average. So of course it can be turned a lot quicker than one of these. However, you've still got to bear in mind the strength of the selling power in the bears we've had for the last few days. So if we're going back up tomorrow, overnight, I'm looking around here, 7,250. Check it on the 15 as well. So there you go, also similar to the 15 minute 200. But again, not getting too excited yet, because fear sells quicker than greed buys. So if people panic and want to sell some more, these prices can turn and it can come and drop back down. And again, we've tested these levels here. So it's always worth keeping an eye on the previous lows and the previous highs. Previous highs again, 7,200, which is up here. So yeah, there it is. Hope it's helpful. I hope I haven't bored you to death. My throat's sore, I need some more wine. So I wish you all the best. Hope you enjoy it, I hope it helps. If you're new to the game, to trading, you want to learn some more from some real people who do trade and you want to talk to us directly, come on board to the forum, and I'm sure we can be of some help. So I wish you all the best. Good night.